Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jeff Kilburg, CEO of KKM Financial. We're going to take a look at the big earnings week that we have coming up just in the week ahead. Jeff, it's great to see you as always. Welcome back to Trade Talks. And really, those 9 to 10 stocks that have been driving the market over the past 3 to 4 weeks, they are all reporting next week.
It's a big week ahead, no doubt about it. Remember, Jill, those were the stocks that really dragged the market lower in 2022, and we saw profit taking. We saw people running away from big tech. But I think you do get excited. You're seeing Amazon move higher today in anticipation of better than expected earnings. I think that's been the earnings kind of news this week. We've only seen about 20% of the S&P 500 deliver, but by and large, we've seen expectations being beat. And how they're being beat, Jill, that's important. They're being beat by nearly 6% on average, and that is way above average.
Are you concerned, though, Jeff, about the concentration risk that we're seeing? It's not like we're experiencing broad breadth in terms of the market doing well. It's just those 9 to 10 stocks. How concerned are you about concentration risk there?
You bring up a great point, and this is really, I think, where active management thrives. We've always talked about owning the proper sectors, staying away from weaknesses. We've talked also about being diversified. So I think this is really critical going into, we have to think about where we've come from. So we take a quick step back, Jill. It's been about 250 days that the S&P 500 has been tethered to 4,000. The VIX now is under 17. We're getting through an earnings season, which is better than expected, but we're all waiting for the Fed. We're about 10 days away from the Fed. It's going to be probably the most dovish 25 basis point rate hike we've ever seen, but this is just a fascinating moment in time, all the while the 10-year note is at 3.5%, and the front of the curve is telling the Fed that they're going to cut in Q4. So there's a lot of mixed signals out there. Look at today, PMI, the best we've seen in quite some time at 53.5. So there's bad sentiment and there's good data. So I'm going to favor and fall on the side of being cautiously optimistic that the market will move higher once we kind of get through this earnings season and this Fed critical meeting.
And see, that's what concerns me, Jeff, because they're starting to price in rate cuts here. And I haven't heard anything where the Fed, not even just pausing, but that shifting their strategy. So that I feel like the market is saying something that the Fed hasn't put out there yet. But another thing that you and I take a look at is when we see the VIX at these levels and the market's been so choppy, to your point, there's two different sides of the story being told here.
There is. It can feel like complacency for all the folks who've been following VIX and trading VIX for as long as we have. But there's also a component that we just think that the Fed, we're discounting the Fed. We've become so conditioned to them being wrong. Let's go back to where they were talking about transitory inflation. So the market is telling that the Fed is wrong and that inflation indeed is abating faster than expected. And that's going to give them cover to not only pause, but they may be forced into some rate cuts later in the year. I'm an old bond trader. You know that, Jill. I cut my teeth in the 30-year bond futures pit. So I'm going to trust the bond leadership versus the Fed. The Fed, great group of academics and PhDs that have never traded or carted up a one lot, and they do not know where the market is going. They're guessing just as much as anyone.
So what is the bond market saying?
The bond market is saying that inflation is coming off more than expected. We're not going to get to the 2% target at the end of the day because that's not realistic. But remember, the Fed moved and made this inflation because they couldn't achieve their 2% target years ago. So I think what the market is saying that we are going to move higher. We still have some macro headwinds, no doubt about it. But where the US dollar is, where the VIX is right now, I think there's an easy path to go up to 44.50 and break out of this range because we've been in this S&P 500 range from 3,800 to 4,200 for quite some time. I'm not saying it's going to be a straight line and we're going to stay up there for long, but I believe that a breakout is coming. The market just feels so coiled to me.
All right, Jeff, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.